what is your cost of capital? And if you're a Bitcoin maximalist, your risk-free cost of capital is 29%. If that's what you believe Bitcoin's going up at for the next 20 years, and that's what I believe. Most people don't have a risk-free rate of 29%. There's a lot of a fiat maxi in Switzerland. Their risk-free rate is minus 50 basis points, you see. So other companies will have other cost of capitals and other outlooks because of their frame of reference. They will actually do those transactions.
Hey guys, welcome to Everyday Finance. When it comes to interpreting cryptocurrency charts in the year 2025, Michael Saylor emphasizes that it is less about memorizing recurring patterns and more about understanding the underlying story of how the market behaviors. As the visual language of the cryptocurrency industry, charts convey the sentiment of traders, the momentum of the market, and the volatility of the market. Every candle or line reflects a communal decision-making process that is formed by tools driven by artificial intelligence. Regulations that are constantly growing and constant technological innovation, OHLC data, which comprises open, high, low, and closing prices, is essential to this comprehension, since it monitors the change of prices across particular time frames. Time intervals ranging from minutes to months are displayed along the x-axis, while price levels are displayed along the y-axis on either a linear or logarithmic value scale. When traders are able to recognize these fundamentals, they are able to read the emotional beat of the market rather than just the numbers.
The molecules 100 meters in front of you. So you end up with this sonic boom and massive turbulence and massive noise and chaos. What's going on with Bitcoin is evolving faster than a society can digest it. And so I think you could say this is all consistent. Bitcoin was misunderstood in the year 2011. It was misunderstood by me in the year 2013. It was misunderstood again in 2015, 2017, 2019, 2021. When we first got into the space in 2020, there were people that misunderstood it, and we had massive amount of criticism when our stock was $10 a share. When our stock went to $100 a share, it was massive amount of criticism again. When it crashed to $20 a share, there was still massive criticism. When we had $2 billion of Bitcoin, people were cackling, or $1 billion, saying, oh, you lost $1 billion on this. When we made $100 billion, everybody disappeared and slunk into the shadows. And then a new set of trolls, a new set of critics came out when our market cap went above $100 billion. It's a different set of cynics, a different set of critics, a different set of misconceptions. I think you're going to see the ebb and flow of that set of misconceptions and that anxiety. It'll continue when Bitcoin is 100,000. It'll continue when Bitcoin is 1 million. It'll continue when Bitcoin is 10 million. It'll continue when Bitcoin goes to 20 million. And there's always going to be a new narrative of fear, uncertainty, and doubt. It'll be a different generation. You know, the people that used to laugh and say, oh yeah, you lost $1 billion trading in Bitcoin, they're gone. They disappeared, right? There'll be a new generation of people that say, do you think it makes sense to buy Bitcoin at $1 million a coin? It's going to trade down to 500,000, right?
Yeah.
And then there'll be a set of people that will say, you're buying it at 10 million a coin, it's going to trade to 6 million, you moron, you lost so much money. This is how societies deal with new ideas. If you study paradigm shifts, how long did it take to embrace electricity? How long did people thought John D. Rockefeller was crazy for 30 years until he was the richest man in the world. Mm-hmm. And then and at the point that he was the richest man in the world, people thought, well, that trade is done. And that was just when they invented the automobile and he got 10 times richer, right? And so the society doesn't really deal with paradigm shifts that well in near term, but after 30, 40, 50 years, you look back and you say, Well, of course, we should have embraced the fire, the electricity, the wheel, the crude oil, the nuclear, even nuclear power right now, for example. Nuclear power has only become cool or useful in the last 2 years. Okay, so for 50 years, people thought nuclear power was an awful thing, and all of a sudden they woke up and they realized that I guess we need nuclear energy to power the AI data centers to make us super intelligent, and if we don't turn it on, we're going to be slow and stupid. So, if it took them 50 years, by the way, nuclear power is like unlimited, clean, free energy, and they had to fight for 60 years to get people to embrace the idea of unlimited clean energy. It doesn't surprise me that there'll be skeptics about digital energy. They won't get it. Max Planck said, science advances one funeral at a time. And what he meant was the old guard, they will never, ever accept a new idea. Whatever it is, they'll die. They will not accept a new idea. The only way you get people to accept a new idea is you wait for a new generation of decision makers, and the old guard retires and they age out. Or you need a war, and people that don't believe in aircraft, but to start believing in aircraft when the aircraft flies over their city and drops a bomb on their head. And people that don't believe in atomic energy start believing in atomic energy if someone sets off a nuclear warhead in the middle of a war. And so I think that disruptive, profound events like a near-death experience like during COVID, I think that introduces new ideas and new paradigms. That's how we got introduced into this space. It was the war on currency and the war on COVID in 2020 that caused us to open our eyes and embrace the new idea. I would say 95% of the decision makers in the finance world still don't really embrace or understand the idea of digital energy, digital capital, digital money. And I don't think it's a bad thing, because the only way you're going to make 10 to 100x your money is if you pick the right thing and everybody disagrees with you.
Yeah.
If everybody agrees with you and you do the right thing, well, everybody agreed you should buy Amazon in the year 2020 during the lockdowns because it was quite obvious that you needed Amazon during the lockdowns. It's the worst investment of the past 5 years because everybody agreed that it was a good investment, and there's a lesson in that.
Mm-hmm.
Michael Saylor draws attention to the fact that frequent chart patterns are representative of trader mentality. To imagine the push and pull that exists between fear and greed, head and shoulders, double tops and bottoms, triangles and wedges are all effective visualizations. In addition to this, he notes that traders rely on technical instruments such as moving averages, RSI, MACD, and Bollinger Bands in order to validate or dispute these visual clues. The context of each market move is provided by these indicators, which tell whether momentum is increasing or decreasing. When all of these components are comprehended, cryptographic charts cease to appear chaotic. Instead, they transform into transparent, data-supported maps that may be used to time entry and exits and to comprehend the direction of the trend with greater assurance.
You can buy something growing 55% a year at 1 times revenue.
Right.
And all of your investors already understand it and support it. Long term, you can buy something that's going to grow 29% a year, no risk, no integration headache. You can buy something growing nearly 30% a year at 1 times revenue, and all of your investors back it. Right? There's no one holding our equity that doesn't believe in Bitcoin, you see?
Right.
They're all Bitcoin maximalists. So why would you do anything other than do the same acquisition at 1 times revenue of something that's hyper-growing monopoly, growing 30% a year? We've done that like 77 times or something, right? So when I look at M&A, I think the perfect M&A partner is Bitcoin. You have a chance to buy the dominant digital monetary network growing 30% a year for the next 20 years with zero risk and keep doing the trade over and over and over again.
Yeah.
Why would you ever do anything else?
Yeah.
Right? And when you do the other thing, you're going to create opacity. You're going to create a diversification discount. conglomerates normally trade at a discount to their net asset value because people think that was a dilutive transaction. It was a dilutive acquisition. It's distracting. So I think that companies, that there is a place for companies to buy a Bitcoin treasury company trading at less than NAV. It won't be us, right? The world's full of companies that do M&A. There's a lot of people that would rather buy equity. There are private equity investors and there are public companies. They like to buy other companies. That's their business model. By the way, none of those companies are Bitcoin maximalists with 100% of their balance sheet invested in Bitcoin, right? They're not Bitcoin maxis, right? There's a lot of, if you're a fiat maxi or if you're a whatever maximalist, and, you might look and say, hey, I believe in this company and it's trading, I can get the business for free because it's trading at its Bitcoin balance sheet. You'll go buy that company because you feel like you're getting the operating business for free and you're getting the Bitcoin in the mix.
Right.
And that's what will support the value of that company. So I think it makes sense, you buy a retailer losing money, that's valued at its Bitcoin.
Yeah.
They'll get bought by another retailer.
Right.
And the other retailer will be like, I'm going to get rid of the cost and I'm going to rationalize the business and I'm going to strip out the Bitcoin because I see the value in the Bitcoin, but I don't want to be in the retail business, you see?
No.
I don't want to be in a money losing. I don't want to buy a business losing. If the business is trading less than the Bitcoin, it's because the marketplace perceives a liability in the operating business.
Right.
Right? And so I'm buying the world's greatest business in the world, the digital monopoly, growing 29% a year for the next 20 years that all of my investors love. I'm buying that. Why would I want to go buy a bunch of troubled businesses that have problems that I have to solve, and I'm going to be throwing my investors' money to solve the problem? That's not what they want, right? So it doesn't make sense for a pure play to buy another Bitcoin treasury company or to buy another company with Bitcoin. It totally makes sense for a private equity investor or an LBO or another conglomerate. They've got all their own dynamics. They'll do the trade. It will be a benefit to them.
Yep.
It will be a benefit to the Bitcoin treasury company that will, the equity will trade up more, right? And it all just comes down to what is your cost of capital? And if you're a Bitcoin maximalist, your risk-free cost of capital is 29%. If that's what you believe Bitcoin's going up at for the next 20 years, and that's what I believe. Most people don't have a risk-free rate of 29%. There's a lot of a fiat maxi in Switzerland. Their risk-free rate is minus 50 basis points, you see. So other companies will have other cost of capitals and other outlooks because of their frame of reference. They will actually do those transactions.
Not parallels.
I think they're totally unrelated.
Okay.
I think when the administration says they want to be a global Bitcoin superpower, they mean they want to encourage banks to bank Bitcoin. They want our banking system to embrace it, to extend loans against it, to offer, yield or credit against it. They want to enable transactions. They want Apple and Google and Meta and Microsoft to support Bitcoin. They want public companies to be able to buy Bitcoin. They want an explosion and expansion of institutional grade Bitcoin custodians. They want favorable tax laws for Bitcoin, favorable security laws for Bitcoin, and they want the finance companies in the United States, whether it's BlackRock or whether it's Coinbase or whether it's Strategy or whether it's Block, they want the finance companies in the United States to lead the way in digital assets and digital capital and Bitcoin adoption.
Yeah, makes sense.
Having said all that, right, all those capital markets, they're waiting for a mega champion, and the mega ones, the ones that are pure digital credit issuers, they could be 100x. They could be, they're ones you can take a $10 million or a $1 million company to $1 billion to $10 billion to $100 billion. And if it's a big capital market like the UK or Germany or Japan, you can go to $1 trillion, right? That doesn't mean there can't be 10 other companies in Japan that also follow MetaPlanet and they all 10x. Because let's take the US. We've issued digital credit instruments in the US. We've issued, 10, $12 billion of convertible bonds. We have about $8 billion outstanding now. We've issued $6 billion or so of preferred credit. What is that compared to the U.S. credit market? The U.S. dollar credit market is, 100 trillion.
Michael Saylor uses the present price action of BNB as a practical case illustration in order to put these theories into practice. As a result of the powerful 95% rally that occurred earlier in the year, BNB is now exhibiting indications of tiredness and is having difficulty breaking through the resistance level of $1,350 to $1,375. The creation of a double top pattern signals possible bearish pressure, with the neckline near $1,100 acting as important support. If BNB is able to close below that level, it has the potential to drop as much as 30%, potentially reaching the $835 zone. The issue has become more complicated as a result of allegations of outflows over $21.75 billion from Binance and concerns regarding vulnerabilities in the margin system, both of which have shook the confidence of investors. The stock of BNB, on the other hand, continues to trade above its exponential moving averages for the 20th and 50th days, which might potentially act as rebound zones. In the event that prices ascend solidly over $1,350 once more, a significant bounce from these levels might potentially nullify the bearish setup and allow bullish momentum to be restored.